Hey, everybody. Super excited to be here. I'm Danish from Paper Ventures. We were early in the Canton ecosystem a couple of years ago, so it's even more exciting to be on stage with a great set of builders. Hopefully, we can learn a lot more about Canton and what it's like to build applications on the network. So without further ado, I'd love to let you guys do a little bit of an intro about yourselves.
I'm Ben. I'm from Braille. Braille's a stablecoin issuer and does lots of other things on Canton, which we'll talk about.
Hi, my name is Louis, and I'm the founder of Minted. We are an institutional-grade stablecoin and settlement and workflow infrastructure being built on Canton. I'm also a content creator on the network, and yeah, thanks for having me.
And I'm Sasha. I'm Chief Strategy Officer at the TIE. So we started as a premier information services provider in crypto. We've been a big part of the Canton ecosystem, and we also provide staking services and work very closely with all the institutions and the token issuers and bridging the gap between the two.
Hi, my name is Dan Simmerman. I'm the co-founder of a exchange on Canton called Temple. We're the first non-custodial central limit order book that's on what's called the Global Synchronizer. We do about 30 to 40% of all of the volume on that open network. And our goal is to really just bring the best assets and the best trading infrastructure to what we call this new open network of public and private networks. So our theory is that as institutions start to onboard to the network, you've seen lots of headlines about it. They're going to be using the same shared infrastructure as what we're building, and there's going to be a lot of connectivity and optionality for all these different counterparties that are coming together in the next couple of years.
Great. Thank you, guys. So I'll start with the most obvious question, and it's to all of you. Why Canton? You know, there's Algorand, there's Avalanche as an institutional network, there's a few other guys that are targeting institutions. So why did you guys choose Canton? And also, do you really think institutions are here?
Well, I'm happy to speak to one of the more obvious things here, which is just, look, I've been building in this space for like 15 years, and a lot of the stuff people sell doesn't work. Like, it's kind of that simple. And so when somebody pops up and says, we're going to build a privacy-preserving ecosystem with distributed validators and, honestly, most of the time, the bet that that's not going to work, like, that's actually probably a pretty good bet. There were 3 or 4 other projects being pitched almost at the same time that Canton was getting started that promised the same thing. And guess what? None of them really work. Canton, on the other hand, actually works. There are actual financial institutions that are coming in and buying. There are actual pilots with people like, or companies like Visa or Bank of America. And so suddenly you get into this realm of like, wow, what is working is what's bringing people into the ecosystem and building on the actual technology, which is different about Canton, and what makes it so exciting to build on.
And the one thing I'll just add to that, so same thing, like I've been building in this space for about a decade, and for 5 of those years, I was very deep in an area called zero-knowledge proofs, which were one of the foundational models for privacy. And you saw lots of VC capital go into these chains that just failed because there wasn't product market fit. And what they found is that that type of privacy is not the type of privacy that institutions need. So maybe I'm kind of, this is from my perspective at least, my theory is, does Canton become more kind of public and performant faster than the other groups become private and compliant? And there's a specific compliant and privacy model that Canton has that institutions favor over some of these open, what are called like privacy pool models, where they might not know who the counterparty is when they're transacting in a dark pool. So at least from that perspective, which sounds simple, is another one of those just like obvious big reasons there's been a lot of adoption. I think why we're excited.
Yeah, that's a great point, Dan, because for us, the choice was obvious because we felt that it was the only infrastructure that could handle institutional settlement and workflow at scale. So my background is in repo. I spent 5 years at BNP Paribas. I ran the repo desk. I understand the type of velocity that you need in order to execute this type of settlement at scale. And I've also lived through the block fragmentation, right? T plus 0 is supposed to take, it's supposed to be single day, but when you have intraday liquidity drag and it, exacerbates to the point where you're talking about a 10-hour settlement, we're talking about a multiple $100 billion problem. And if you can streamline that using the blockchain in a way that's institutionally legible, that meets institutional needs, then you've unlocked an enormous opportunity as far as changing the central nervous system of finance. And that is what Canton does for us. Sub-transaction privacy at the contract layer. It's like Dan said, it's not like bolting on ZK, right? There's still a lot of global state issues as far as size. It's built for this type of scope. So that was kind of our motivation, more or less.
Yeah, and on our side at the TIE, we were very focused on institutional crypto. And back in the days where nobody was really everybody was retail driven and looking at all the shiny things. And one huge topic was collateral privacy. And we were seeing with all the market participants we were talking with is, well, they get all those on-chain addresses and they get doxed. And then when you make a movement, it becomes a market moving movement just for a transfer. None of that tells you what other position you might have, and then it becomes a huge issue because then people try to infer what positions you have, and when you need to place more collateral, then people can infer it from your movements on chain. And so it's a huge issue, and the zero knowledge proofs are super interesting from a fundamental perspective, from an academic perspective, but judges and the regulatory system is not ready for them, right? Think outside finance. If you serve alcohol to somebody at a bar and you go to a judge and you say, well, I didn't check their ID, but there's a zero proof that told me they were above 18 in Europe or 21 in the US. What is the judge going to tell you, right? And so I think that's the issue, and that's what Canton was solving is private key crypto. Your browser runs on that, right? It's we know how to obfuscate information and keep it private and give the right access to who needs to have access.
Thanks. Now, specifically to building on Canton, maybe less so for you, Sasha, but for the other builders, Canton has its own language, DAML. We say new languages are a pain in the ass, but everybody loves DAML. What's it like to build on Canton, ecosystem support, getting DAML, building on DAML, and also the conundrum where DAML is built by digital assets. They own the license. What if they go under? What if they change the licensing? What happens to your tech stack then? So
in our experience, DAML is kind of a very close offshoot of Haskell, which is a well-known institutional language. So the transition for us was fairly frictionless. But what I can say about the language, I look at it a lot like Solana and Rust, right? When Solana first launched, the builders were complaining about Rust. Oh, I can't scale it. It has all these issues. It's difficult to build. It's costly to stand up. And now, the Solana build culture just started thriving because I feel it takes this time to actually have this coalesce amongst developers where you get used to a new language and it starts to scale from there. So I think there's always those little bit of growing pains, but as far as what you can do in the language itself, I think it's well worth the transition, more or less. I mean, you're talking about counterparty direct conditional contracts enforced where you have deterministic finality instead of EVM probabilistic. So if I send Danish $5,000 and I overpay by $2,000, the money's not gone, right? So I don't have to go to Danish to get my money back. It's executed per the terms of the contract and how you build it. So that's the type of control you need, which we love DAML. So
yeah, I think oftentimes people underestimate the importance of ecosystem and overestimate the importance of technology. And in the case of DAML, yes, there might be some friction at first, but take a step back and look at a big financial institution. They have hundreds of engineers, thousands of engineers, right? If the head of engineering and the head of finance decides, like, hey, and goes to the head of engineering and says, like, you're going to build in Daml, like, okay, you train a bunch of people, and in an AI native world, it's becoming increasingly easy to do the training, do verifications, and translate codes from other languages into the right language.
And if you look, sometimes a DSL or a domain-specific language, before an ecosystem and after an ecosystem, you see a very different track. So I think DAML's been around for a very long time, and once the ecosystem emerged, there was now a set of incentives for people to get interested and start building real use cases, real partners. So.
I will be the first to say that when I started working on some of this stuff, I did not know what I was getting myself into, in full transparency. Has anybody in the room built applications with Canton? So some of you know it is actually quite difficult, but it is also actually quite difficult to get pilots going with companies like Visa, Bank of America, Cumberland. These are names of note, and they're the ones that I can think of at the moment, but there are so many. And so when you're thinking about, is that worth it, and what are the alternatives, the next questions are things like, what are other blockchain ecosystems that are operating with privacy-preserving state that have already been included inside of financial institution call reports that regulators have reviewed? Can anyone think of one? What's that? Well, I can definitely think of one because they're in our call report. We're a regulated financial institution, and we had the opportunity to do that, and we'll continue to do it. And I can tell you, explaining those attributes to a financial institution in the United States and abroad is actually quite easy because it operates like their core system operates. And so suddenly the complexity of the technology is actually easier to get through social complexities on the other side. So it's like you're investing in technical complexity but reducing social complexity on the other side, which the trade-off is actually, it's quite worth it.
And I don't know if the technical complexity is that big of a hurdle.
Once you get over it.
Right, because our CTO started building, learning everything about Daml, had never touched Daml or Pascal or anything, and didn't come from traditional finance. And in a couple of weeks built an app.
We don't see a risk that digital assets holds the license to Daml, right? Because they basically kind of control it. So it's kind of like a centralized risk factor.
Yeah, but you're building on their blockchain.
Yeah, I mean.
I think all ecosystems have features and they have trade-offs. And whether or not you see that as a positive or a negative, it is something to be comfortable with. And I think that I can't speak for everybody on the panel, but DA is investing at a breakneck speed in improvements and in coordination and in support. And I think that deserves to be mentioned. They're good people to build with.
Ben made a great point about what's difficult to build at inception and what's going to pass a risk committee. And when it comes to an institutional risk committee, there needs to be parameters in place that can function in that way. So yeah, you take a little bit more of a burden from the start, but like Ben said, the digital asset and Canton team have been amazingly supportive, and there's so many resources to help. So
great. Now, again, just as builders, as we all discussed, Canton's institutional chain is for institutions, but also people talk about retail, and retail brings a lot of volume, low value but high volume sort of stuff. Solana proliferated because of meme coins. Even Yuval has said, hey, we want some meme coins on Canton, sort of thing. So as builders, you're building for institutions, but also B2B2C for retail. How do you balance that? And what's that juxtaposition that for institutions, but also we want meme coins? How does that work?
I can say from a perp dex perspective, that's one sector I'm really excited. I was a high volume perp trader for a while, and I've been headhunted before. So open ledger amongst large scale perp traders is not ideal. So the way I look at Canton is the perfect venue for a great perp dex because you can have privacy that's customizable at the ledger level, and you also have the identity shield if possible. So it's full circle privacy. So I'm really excited for that sector on Canton, but yeah, we'll have to see how it goes. But that's one area.
I think if you look back at the history of blockchain development, what you find is that any blockchain ecosystem that tries to just be institutional or just be enterprise forgets that it's playing it's not a product, it's not a company selling a product or a service. You're usually a protocol playing standards games within an ecosystem model. And in that frame, I think giving up or kind of cutting up use cases like that as we're institutional or we're retail, I think it's tricky, because if you have all the institutions on board and then you've got a quote-unquote retail chain and the retail chain has a lot of volume, those institutions are going to ask their stakeholders, why are we on that chain where everyone else is? So I think it's kind of a paradox. In some sense, there is no such thing as an institutional chain, and in other ways, I think Canton is and the institutional chain. So we kind of think the same thing. We think that like B2B is really important, B2B2C is really important. You've heard Yuval talk about kind of retail being an important part of this equation. And when we talk to a lot of institutional partners that are on the network, distribution is really important for them. So I think they're just as interested about the down order, like part of that workflow of how the assets that they're issuing get in the hands of retail users to really geographies all over the world.
Yeah, and I think you need to split retail between like crypto native, more like native, like early adopters, and retail, because yes, you kind of need like all the meme coins and like all the trading going. That really allows you to test your network, really have a lot of usage, like really test everything, get all the pipes clean. And but then the big game is like you're a random person and you want to auto invest your salary into your retirement account, right? And like as Apollo was putting it, right? Like how do you automate all this? And when you get there, when you're a JP Morgan or a Fidelity, and you can do this seamlessly and have it on chain, I mean, to me, that's the big retail market.
Yeah. Can I say, I don't speak for the foundation, but if like the next use case appears, if it's robotics or AI, I think Canton's going to want it on their chain. I don't think they're going to look at it and go, oh, that's that's a retail thing. That's for the Solana network. I don't think that's a smart model.
I think all these use cases have a lot of merit and a lot of growth, and a lot of the things we see are, being frank, very, very boring. So like payments applications, when payments companies do things like RTP or ACH payments or any payments around the world, they do something called pre-funding. They put the money up in an account. When you put the money up into an account on a public chain, it's a huge target. When you put the money up into a private ecosystem, all of a sudden it works like your bank works, but has the benefits of being on chain. That's a huge value proposition for payments companies, and that's one of the reasons they love Canton, is safer, same speed, and then they can go public whenever they want. Similarly, embedded finance companies, when you settle credit card transactions, they go through a network of banks that happens in private to actually settle the funds to redeem it in USD. Suddenly, when stablecoin issuance is one of the fastest growing parts of a company like Visa, that is why a privacy-preserving chain used for stablecoin settlement on the other side becomes highly valuable. Same thing with a bank core system that might be experimenting with on-chain finance that wants the speed and the benefits, but needs it to operate like the core system. Canton and party IDs is what starts to show up. They don't even know what a party ID is, but when you explain it to them and they see it, they understand its attributes. And suddenly the attributes of Canton become like sales features that are exciting for the buyer as opposed to things you have to explain, which is, again, I think that's one of the reasons for the continued adoption, is like that mental model just keeps working.
Great. Now, kind of delving deeper into each of your projects and companies that you work with. So, starting with Sasha, we talk about privacy in Canton, yet the tie is all about intelligence and data transparency, et cetera. So, how do you balance that by saying, hey, Canton's privacy preserving, you won't know what contracts do, et cetera, but you then provide open data for what the validators are doing, how the mints are happening, all that sort of stuff. So how do you balance that?
Yeah, so we were the first data provider in the world to have Canton data, and we basically worked directly with digital assets to do this. We spent a lot of time working directly with them, verifying the methodologies, right? And that's completely different shift from what you get in crypto, where the people building the analytics are very different from the people building the infrastructure, right? We work directly with digital asset to make sure the methodologies were right, the numbers looked okay, right? And And at the end of the day, right, like if you want more information, you're going to need to walk that fine line of like being able to aggregate things in order to have things that can be reversed engineered, but still get some insight into what is going on in the ecosystem, where a flow is going, what is needing some traction. And so you need to build those kind of like give-get relationships. And this is really hard to do in crypto, right? And because a lot of it is either too transparent or not transparent enough. And so by having a data provider in between, you can have that sort of like trusted relationship where not only can you make sure the methodology is sound because you have access to the underlying data and making sure it's the right methodology, right? But at the same time, you can have the great provision of that data in a seamless way and easy to use way.
Got it. Thank you. Now, Ben, for Braille, I mean, forgive my comparison, but I would say Braille to me is kind of like Bridge, to lack of a better comparison. Correct me on that.
I will.
Now, how do you balance stablecoin issuance on a permission chain compared to USDC and bringing it over, which is also permissionless on Ethereum and other networks?
I don't. If you want to go launch a new stablecoin with Braille, you log in and click a button, and it will be live in about a minute. You can do that on Canton. You can do that on Solana. You pick the ecosystems that have the attributes that you want.
And it's literally a button. Like I've done it.
Oh, great.
I mean, I think that is one of the things that is really important about the way our platform works is it enables our clients to, across 30 ecosystems, which is a big difference for us, to pick the ecosystems that have the attributes that they want. And when you think about this attribute set over and over, the reason they choose Canton is very obvious, and it's getting more obvious by the day. I mean, like, there are more projects coming online all the time, and by giving our customers that choice, it lets them go where they want to be, and Canton is one of the places they want to be.
Great. Can you give us some numbers, like how many different stablecoins have minted on Canton? What's the volume?
I don't know the Canton specific numbers, but we've launched hundreds of stablecoins. We've launched more stablecoins than I think any company on the planet, and that's accelerating. When you launch a stablecoin, it's also interoperable with every other blockchain. It's interoperable with every bank account in America. It supports RTP. It supports wire. There's no basis points on on-ramping and off-ramping. And where I'm going with all this is we're reducing the barriers so much. The rate of actual acceleration is it's unlike anything I've ever seen in my career. And again, when it gets to privacy-preserving state, Canton has been the runaway, and I think has and will continue to be in a lot of ways. And if you think about sort of like where we are in the market, there's, well, quadrillions of dollars that are going to come online and want that state. And so I'm very proud of where we are, but as I remind the team, where we're going is very important, and if we focus on the growth inside of where the adoption's already coming from, there's just like so much yet to do.
Thank you. Now, Luis, for Minted, obviously you're doing a stablecoin as well, but you're also borrow, lend, and facilitating loan and transactions, etc. Do you not think that if you're facilitating, I mean, obviously we'd love to learn more about Minted, but facilitating private placements is kind of mirroring how it happens in traditional finance anyway? Like you're doing it in a siloed system and not giving retail access to such opportunities.
Yeah, so the actual stablecoin itself is settlement, and it's an institutional grade settlement workflow infrastructure. So we say the quiet part out loud, and that is the cold start adoption issue within institutional implementation. I mean, I lived it. If you look at the data, it supports it throughout all of these systems: ACH, ATM, SWIFT, Oracle, SAP, DTCC, the list goes on. All of them were more than a decade until they reached mass adoption, sometimes up to 20 years. We work in existing settlement infrastructure through a federally OCC chartered national trust bank that coordinates our issuance and the securities representation issuance and conducts atomic swaps on Canton for settlement. While the institutions can work on existing rails, doesn't require the infrastructure lift that you're basically reinventing the core central nervous system of thousands of counterparties, essentially, because it's either everyone adopts or the chain is broken. And that's the problem in a lot of these institutional consortium models. And that is our target value prop. And there's a huge appetite for this because, again, this is a multi-$100 billion issue and what Canton was built for, essentially. Now, the yield engine part of our business is a separate bifurcated vault. So essentially, they are institutional grade vaults. They're not generally suited for retail. So private credit, structured credit, vehicles like ILS, reinsurance, as far as litigation finance, cat bonds, and things of that nature. Generally A-rated. These are very, very institutionally legible. 10 years, no defaults, 25 years historical data, and with very aggressive fixed rates. So again, I'd like to make an offering that is more accessible, but that is generally where what we can offer at the time. So other protocols is a great option. Exchanges, anyone looking for a robust yield that is that's ultimately insured and can pass their own internal IC is what we offer.
Thank you. And Dan, Temple is building, or has built, a club on Canton, promising sub-second finality, which may or may not be fast enough for institutions, but would love to hear your thoughts on that. But how do you convince an institution to come and trade on a non-custodial club, high-value transactions, especially when you're dependent upon validators in the network? And what if, for example, validators go down? How do you guarantee finality and execution and so on and so forth?
Yeah, I think our goal isn't to convince them. I think we just need to keep executing. So we've been building for about a year now. We've done about 8 months of proprietary R&D. When we launched, we can only do about 15 orders per second. And in our most recent release called Lightspeed, we can now do about 100,000 to 1 million orders per second, and they scale horizontally across all the pairs that we support. So I think that we're going to be able to continue to keep increasing and getting better metrics. I think that generally. With the Canton Network. So we're very active in governance. We're very active in actually participating in the development of the protocol. I think it is very early days, and I think there are some conversations about like validators and how the super validators are working. I don't think it's worth commenting on that now. I think it's just most important is being battle tested, and we're battle testing every day. So we've done about 150 million in volume. And to some of the comments on the panel, it's very early days for Canton, right? It's like, when you hear a network like Sui that they just launched, and then you've got all these apps, there's no liquidity, or you hear the tooling is still early. We're kind of still there in Canton in some ways. So every time that we push the boundaries of our own platform, that can impact the network. So I think that really what's going to make or break us is the assets that we bring on board, and really just good assets and good experience. And I think it's going to move away from performance questions to what are you doing for the industry? And I think what we're doing in Canton and what we're doing at Temple is really providing access to innovation. And one of our theories is that we think in the next 10 years, it's possible, and I'm saying this, I realize this now in the biggest IPO moment in history, I think that the notion of the IPO is going to fade out altogether. There might not be a need for the IPO in a world where you can tokenize stocks at equity at incorporation. So the idea of a stock and an equity start to kind of blur a little bit. And in there, we just want to give people access, whether that's institutions, whether that's retail, access to the best new instruments, whether it's the new robotics companies, the new AI companies. And we just think in the last couple decades, that's been one of the biggest problems, that people don't have access to these things. So I would say that working closely in partnership with these institutions and then offering just novel solutions that they can test with, they've got a really good test environment building on Canton. I think that by the time they're interested and they're playing around with our infrastructure, I think that Canton, a lot of the early bugs are going to be ironed out, or just kind of the early aspects of it. And then we will have been running for quite a long time, and I think they'll feel very comfortable.
Got it. I just have two last questions. One around the initial tokenomics that matter to, I guess, most retail. The fact that everybody got a whole host of tokens for being super validators, and there's like a giant token overhang. how do you convince people that it's not just an institutional dumping ground for, super validators to dump their tokens? I know there's lockups now, et cetera, but like to an average retail person, those tokenomics look kind of wonky because we just got free Canton for the past 2 years.
I mean, I'm happy to speak to that. I mean, I, again, wasn't necessarily aware of a lot of what I was getting myself into. But what I think is interesting is the way the ecosystem has evolved is that it has encouraged many people to think like stakeholders and to think about how do we build together and how do we think about what the ecosystem needs. And a lot of the people and a lot of the companies that are coming in, at least the ones that we're talking to, are not necessarily focused on tokenomics first. They're focused on the features and the attributes of the network first. And I think there's also things that, as they get into the network, create additional incentives, which are really helpful. But when we're talking about attracting people in based on a very specific feature set around privacy, that's the start of the conversation, at least for us.
I think the reward structure was built to incentivize long-term alignment, and it rewarded generously under those pretenses. So my counter argument to that would be, if institutions are utilizing the technology at scale, which is the real value prop, why would they want to hurt the ecosystem in its inception liquidity environment? And I also would argue that no ecosystem has started from an enormous liquidity injection, right? This type of stimulation happens naturally over time. So essentially, that's kind of the way I look at it, more or less. And I think it does align the larger DSIBs and super validators on the network for a long-term goal and purpose here. So for me, it's not really something that keeps me up at night at all.
Now, I guess last question. What would you say to folks who say, Canton is centralized or it's a boys' club because of the whole super validator voting, because of being a featured app is all about who you know, how do you get the votes in, sort of thing. So everybody looks at, and there's a huge debate on Twitter about it. Like everybody looks at it as like a closed ecosystem that's centralized. Like, what would you say?
Well, I have two questions. Is Binance decentralized? Is Binance on-chain?
Well, no, Binance calls itself a centralized exchange, right? So it says it's a centralized exchange.
Yeah, so that's where, like, when you look at all the big financial institutions or all the crypto institutions, right, they're all very centralized, right? Decentralization has a huge cost. And if you want to offer better financial products to retail, you shouldn't be bearing that cost, right? And if you look at the trend that has been happening in tech, you see the same thing, right? Like the Googles, the Metas, right? Like you get those economies of scale, and that, whether you should like that or not, whether there should be a split of these, that's another question. But I think what's undeniable is that when you have the right amount of competition, it trickles to better products and for retail.
We now live in a world where centralization and decentralization can both exist. And there are spectrums of that, and this is the coordination set that brought us privacy on-chain that can bring most of the world's capital on-chain. And I think that coordination set is what it is for a reason. I think it's beyond my pay grade to sort of like state it's right or it's wrong, but it is. And I think it's bringing us a feature set that's going to bring more of the world on-chain. And I think that's really exciting.
Honestly, I look at it as a feature and not a bug. I know what the cypherpunk ethos is, and I know what living by that book in a black and white framework has gotten me: an unquantifiable amount of rugs and hacks and everything in between. So if there needs to be a bar that can help the best projects come to scale, I'm okay with that. Right? Maybe spinning up on alchemy, is not the best way, right? So, I think that it will grow into, and the validators are growing by the day, and I don't think it's as gated as people want to make it out. From the content, I have hundreds of projects in my DMs looking for validator paths, and not one of them has ever said to me, I was denied for a validator. They just need to prove the build in the sandbox and deliver value and prove that this is something real. right? So essentially, like that's the way I think you build a better blockchain.
Fair. Jen?
I agree that I think this notion of like centralized and decentralized, I've been saying this for years, I think it's going to blur a little bit. And I think that we'll probably have to do a better job of rating what it means to be fully centralized, fully decentralized. In the ZK space, there's a lot of talk about like off-chain verification, where you take off-chain compute, you bring it on-chain. So I think this notion of what's on-chain, off-chain, centralized and decentralized is going to be, we're going to have to like reconceptualize that. And I think there's even a world, I think there's a world that other blockchains, I've talked about this in the past, other decentralized blockchains might end up pulling from Canton as like this canonical environment for capital markets. And in there, they'll actually appreciate the attributes of Canton, whether you call that wrapping assets or just like projecting these assets to other markets. It's been spoken about a lot about how asset issuers need centralization. So if these other chains want access to these markets, they're going to probably have to play by those rules in some form or another.
And I think one thing that's clear is if all the financial institutions start issuing services on Canton, because it's no longer a career risk for them to do so, it's going to become way more decentralized than any of crypto is currently.
Great. Well, thank you for that, gentlemen. Hopefully everybody learned a lot about Canton and each of these guys' projects, which is amazing. Thank you for taking the time. Can we have a round of applause for the panelists?